I'm excited tonight. So we're going to talk. Before I get started in presenting the Fire Family Financial Panel, let me go ahead and say a couple words about the Home Builders Association. So home builder associations are really the voice of the construction industry for both the home and commercial building and remodeling. Our HBA Metro Denver office the members perform over $5 billion annually in and around the Metro Denver area. The Metro Denver HBA has been in existence for over 80 years, and our members produce over 1 million homes and add millions and millions of square feet for both commercial, retail, and industrial space every year. The Metro Denver HBA is part of the larger NAHB, or National Association of Home Builders, representing over 140,000 companies and 10 million members throughout the association. You can find all this information and more about the Metro Denver HBA at www.hbadenver.com or by calling the office 303-778-1400. All the videos that we're recording today and all the videos we have recorded from this series and this session will be available on hbadenver.com. Top right-hand corner, click on the Marshall Fire. You'll find a whole list. We've gone through all the different aspects and we keep adding more, so come in and check in. Now for tonight's presentation, hosted by the Marshall Fire Task Force Finance and Insurance Subcommittee, we're presenting the Fire Family Financial Panel. And in no particular order, I'm going to introduce my panelists, and I'll ask you to give a brief introduction, and then we'll roll through all four of you, and then we can get kicked off. So I'm pleased to introduce my co-chair to the Finance and Insurance Task Force, Casey Bushnell of First Bank.
Thank you, Jake. And my name is Casey Bushnell. I'm the co-chair of the Finance and Insurance of the Marshall Fire Task Force. I've been with First Bank for about 8 years now. I've got experience both consumer and commercial lending, and of course, including construction lending. Thank you.
Very nice. All right. Danny Langerman of DHA Financial, take it away.
Thanks. I'm Danny Langerman. I'm with DHA Financial. I'm co-owner with my wife. Our company's been around since 2001. We're a mortgage bank here in the Denver Tech Center, and just eager to help out and do whatever I can to help the people from the Marshall wildfire.
Great. Next up, Brent Phillips of Colton Mortgage. Thank you, Brent.
Thanks, Jake. I'm Brent Phillips. I'm president of Colton Mortgage. We're located here in Greenwood Village. We lend in approximately 25 states. We're a mortgage banker and specialize both in residential purchases of resales as well as construction lending on our side. So appreciate the opportunity to be here and answer any questions and help people however we may with this situation. So thank you for having us.
Thank you very much. And last but certainly not least, Troy Arnold of Wells Fargo.
Yeah, thanks, Jake. Troy Arnold, Wells Fargo Home Mortgage, and I manage the private mortgage banking team for Colorado up and down the Front Range. And our focus is primarily on residential home lending. We happen to have a focus on new construction with my group. So glad to be here. Appreciate the opportunity to be a part of the group. Thank you.
Now, I don't want anybody to be distracted by the number of people we have, because this is being recorded and we're going to be producing this and have everybody out. So they're just missing out on this opportunity, which I'm going to step in and fill in with all the good questions that I can ask to really pick your brains and have the full access to that. So I'm really excited about this presentation. I think we're going to learn a lot about banking and financial options because we have a great spread of panelists. We have private, we have large banks, we have small banks, we have everything that we would need. And we're really going to talk about what that means for not only the fire families, but also the builders who are associated with fire family rebuilds and reconstruction, and kind of get into some of that with some Q&A. So if anybody has any questions, what we're going to do as far as a housekeeping event, please just raise your hand in the panel. I'll call on you and we'll try to affect and find out who the best person to answer that question is. And having different people of different sections of the industry that might give us different answers and different views on the same topic. So really excited with that. So we're looking for both information on both partial and total loss as the fire families situation. So with that getting started, I guess I'd like to talk a little bit about how you now, obviously a disaster has happened. It happened in December of 2 years ago, right? So we're about a year and change out. Let's talk about, as a banking group, what are you seeing as far as people coming to you? Are things starting to pick up? I know there was a long period of cleanup, and there was a long period of setup and planning and everything else. So talk to me about volume wise. Like, are you seeing more? Casey, we kind of touched on this. Are you seeing more people come to you for bank loans at this point? Is it picking up? Is it slowing down? Let's talk about current conditions. Anybody want to pick that up and run with it?
Sure, I'm happy to talk from the non-bank environment. We are a mortgage banker, so we fund all of our loans with our own warehouse funds. Some of those loans we choose to service, some of those we sell off, and we operate, like I say, on the resale environment as well as new construction, whether that's through a production builder that we support a lot of our builder base, or through smaller builders that don't have the vertical capital. So they're typically going to require that the property be under contract by the consumer, and the consumer essentially access that financing capability on their own, and we would provide that product to be able to finance that. But we've seen certainly a slowdown over kind of the last half of 2022. The entire sector, obviously, if you look at any of the numbers, whether it's purchase or refinance, there's been a slowdown. But there's still, an inventory shortage. There's still things that are problematic, I think, with regard to the industry. So it should give, Marshall Fire consumers peace of mind that in the rebuild process, I think values are still going to be supported very well. We don't anticipate, extraordinary pullbacks and values or anything of that nature. Granted, each market neighborhood is slightly different. And we have had a significant run up over the last couple of years of values. So some of that, of course, will pull back. But as a whole, from a volume perspective, yes, we've certainly seen realistically probably a 60% slowdown. I think industry wide, we've seen, even greater than that in some areas. But our business has been predominantly builder business. And so although we've seen some cancellations in builder contracts, roughly right now about 8% of the pipeline, it's still been relatively strong, and builders are certainly incentivizing in certain areas to ensure that they close out their pipeline of homes that have either been under contract or have been completed or spec homes. They want to move those homes. But all in all, we've seen a slowdown in production, but we haven't seen it to the degree that long term, certainly, we don't anticipate it hugely impacting valuations or anything like that.
Sure. And that slowdown started, I've been told June 1st is probably when the entire market, that's nationwide, right? Not just here, but I've heard June 1st is kind of where things started to change. All right. And specifically for fire families, have you seen an uptick? I mean, have you seen, because I know permits are now on the rise, which tells me that people are getting their financing and planning in order, and they're starting to actually move forward through the planning and prep. Anyone else want to comment on volume wise?
Yeah, I'll chime in there too. What we saw initially, so I've got a team in Boulder, and they sit in a bank location in Boulder. And so initially the calls were, how do I handle my insurance information? And because when the insurance checks are cut, they're payable, if there's a mortgage, they're payable to the homeowner and also to the mortgage company. And so that was the first wave of dealing with that. That obviously now has since passed. And we've kind of moved into the next phase of our bank customers who have been impacted, really just exploring. And what we're trying to do is educate folks on the nuances of a construction loan or construction to permanent transaction, because that's very different than just a standard mortgage when someone purchases a new home where the builder has the financing to construct the home. And so many consumers have never been through that process of a construction loan, and it feels overwhelming to many people. And so what we're trying to do with our customers who are reaching out to us is to walk them through the basics of how the process works. And there's some really good builders. We met with a builder yesterday morning who also have good information on how their process works. And I think that that's where we're at right now, is the educational phase, because we've talked to people who have said, I'm not so sure I can manage this process because I don't understand it. And maybe it's better for me to just sell my lot and go and purchase a home in the traditional way. And we're trying to educate. That's a consumer's decision, and we're just trying to educate on here's what we can do. And like Brant mentioned, you know, the market in general and the appetite for people purchasing or doing mortgages is way down right now. And of course, that's due to interest rates rising. And so what we've seen over the last several months is an increase in interest from consumers with long-term interest rate locks, which many lenders offer. And that has been very popular. These long-term locks can be done anywhere from, depending on the company, 6 months out to 2 years. We actually can go out to 2 years on those. So that is something that has become popular because of the threat of rising interest rates. And today we had an inflation report that came out that was favorable. And I think that we are going to start to see some relief with mortgage rates, but that is absolutely on the consumer's minds. And that's what we're trying to help kind of talk them through too at this point. So.
Great,
You-
great
you brought-
points, Troy. Just to add on to what Troy said about the education, the construction process, we see that a lot on our side. You know, it seems highly cumbersome and challenging. I don't want to minimize it by any means. It's relatively easy process, but there are multiple steps. I mean, obviously there's trade delays, there's weather here that can be problematic. You know, there's permitting, there's just red tape that everyone has to recognize, understand, and realize that you know, I think the builders, they want to certainly deliver a great home. The client wants that. And usually the timeline and the time horizon is what becomes problematic of, you know, you've got family, people have, life goes on, and you need to be able to effectively plan for that. And sometimes it's hard to do that. Sometimes the builders, you know, they anticipate, hey, it's going to take us, you know, a 10-month build process, and that turns out to be 14 or 15 months. Sometimes that is because of the trade partner delays and such with builders. Sometimes it's municipality delays, sometimes it's weather, you know, or combination thereof. So as Troy was alluding to, you know, I think understanding that process is the key in the construction cycle. And however, you know, as a partner with the consumer and the builder partners, however we can create relief and understanding and clarity in that process, is certainly our goal in that, because it does become stressful when, you know, things can and go wrong sometimes. So
Starting back, I'd like to bring up something Casey mentioned in a previous episode that we recorded earlier this week, when he was talking about the sequence of events and how it's critical to get your banking finance partner on board early. And Danny, you also mentioned this. Can you talk about the importance of getting your banking partner on board early, as opposed to moving too far down and then potentially running into the problem that we've been discussing here?
Yeah, I think that's probably the most important piece of it to start off with. You know, because whatever you're doing, whatever you're looking at as far as your build goes, you're going to want to know how much you can qualify for, how much money you can actually get for that build. So you don't want to be all of a sudden, you know, engaging a builder and not have enough money at the end to be able to you know, fund the rest of your project. So it's important to get everything done at the beginning, and you know, it's a pre-approval process, just like it is, you know, with the refinance or I'm sorry, an existing home build or a current build. You know, it's getting that pre-approval done ahead of time, so you're just more prepared, and it gives you, you know, a lot more leverage as well with the builders too. So, you know, it can allow you to add stuff, take stuff away, and it gets you, you've got more knowledge. The builder's going to have a lot more, you know, confidence, you know, that they're going to be able to get paid. So there's a lot that goes into it, and you know, in my opinion, I think it's the most important piece to begin with. Period.
Well, in Casey, I guess run the opposite scenario. If somebody decides to take an insurance payout, engage a contractor, start down the road, realize there's a funding gap or a gap of financing. I mean, hit that for us.
Yeah, absolutely. And I can understand the desire to get going, there's gonna be a lot of competition for builders and getting all this done. So you just want to get going now and you have funds now. But from what we've seen, the use of contingency is a certainty, and people, I don't know if they're considering that. There's going to be contingency, even if they think they have enough for the build right now. And there's a chance they haven't even run that budget, check for a funding gap. So one of the worst case scenarios is if they start the build without the bank, then they get, halfway down the road or however far, and then they realize there's a funding gap, say $50,000 or $100,000. They don't have access to those funds. At that point, it's going to be a lot more difficult or nearly impossible to get a loan against the property that's going to be, a part of the full picture, at least. I mean, you could get like a lot loan easy enough, but for the as complete and as is like total allowable cost and as complete value, that's going to be the difficult part to be able to lend into at that point and get the funds you need to finish the build, because the house doesn't have value that we can lend into at that point. So unless they have sources of other uses of funds, other equity in other properties, something else we can tap into to do a loan, they're going to be in a difficult spot.
Troy, you look like you want to add something to that.
Well, I think there are certainly challenges if when a consumer comes and the project is, let's say halfway through, there is the possibility of mechanics liens on the property and other risks that from a banking perspective makes it much more difficult to enter into that transaction and offer financing. And ultimately, in order to convert the construction loan, which in its simplest form is really like a line of credit that gets converted into a traditional mortgage once the property is completed. In order for that to happen and have that traditional mortgage at the end, the property has to be completed at that point. And if the funds run out, then there's no way to get the property completed if there aren't additional sources of funds outside of a construction loan. And so that presents a big challenge, obviously, too, because the home has to have the certificate of occupancy and be, done in order to get that mortgage put onto the property. And typically the construction loan would have a shorter term, typically a year to a year and a half, something like that. So that absolutely is a big challenge if a project is started and then, and the funds run out. That's a major issue.
Well, you bring some. Sorry, go ahead.
We do partially complete construction financing, but there are some companies that won't touch them. There are others that it is problematic, as the rest of the panel is associated and talked about. But one thing to keep in mind is it's almost like you're starting from the very beginning, because as Troy mentioned and Casey mentioned, and as well as Danny, everything has to be revetted essentially to ensure that you can lend upon it, and it becomes problematic. And again, you're essentially doing a lot of the same things that you do from the beginning of vetting the builder and vetting the process and vetting the timeline and so on and so forth. So it's almost counterproductive if you kind of get started midway through or think you can finish it and you can't, and you're having to jump through hoops. And then, as a consumer, you're dealing with probably more costs associated with it, interest costs, etc., and new closing costs and things of that nature. So I would say it's probably a best practice, even if you feel like you have the financial means through insurance or what have you to do it. It would be, you'd better serve yourself to get financing in place and proceed forward, and probably utilize the financing and have your money or other financial resources on hand should you need that. Then you don't have to start all over midway or 3/4 of the way through the process. It'll save you money in the end by doing that, in my view.
So we're in an interesting situation because again, this specific contextual point of the Marshall Fire task force, and any task force, quite frankly, puts a undue stress on the market because you have a normal situation of the home building market, whatever market you're in, fire, flood, hurricane, whatever the case is. There's a normal cycle, there's a normal process, there's normal things, and then you throw in a catastrophic event, and now you have an excess demand on the builders in the area, like we have in Marshall Fire. You also have clients who never had aspirations for building their first home. They never wanted to build a home. They wanted to buy homes. They like buying existing homes. This is a very new event. So I guess not to go super preschool basic here, but you've mentioned a couple of things that I just want to make sure and streamline and clarify. There's two very distinct differences between construction financing and permanent financing, right? And I know you guys, this is every day for you, but can you kind of give us a quick breakdown? Does somebody want to pick up one or both of those and just kind of talk to us about the differences and what's involved in that different aspect, so we can lay a foundation for which we can speak from?
Sure, I'm happy to speak to this.
You take one and we'll let somebody else take the other one. So go for it.
Yeah, sure. Obviously, permanent financing is what we call in the industry kind of the takeout loan. Those can be done in one transaction. They can be done in two transactions. There's pros and cons, I think, to all financing structures, but essentially the permanent financing is ultimately, how you're going to finance that long term. So from a qualification standpoint, you're going to meet whatever program you fit in, whether you're a traditional, conventional, conforming type borrower, which means that you have plenty of assets, down money, debt ratios, qualifications, income, all of that can be validated, and you meet kind of the Fannie Mae, Freddie Mac guidelines. If it's a government product, FHA, VA, that you meet those financing guidelines. Outside of that, there's going to be non-qualified mortgages, which is more of your, I've got good income, but I can't prove it through tax returns, those things. That's going to be more of a non-QM product. And then obviously you get into the jumbo products, and jumbo products from a qualification perspective are going to be similar to Fannie Mae and Freddie Mac, but there's going to be an extra layer of, higher credit scores, more reserves, lower debt ratios, lower loan to values, et cetera, that are typically associated with that. So that's kind of your traditional takeout structure. And then on the build side or construction side, that's going to be more to what Troy alluded to, kind of an equity line of credit that your draws are made from as the property goes forward. So I'll let Danny or Troy speak to that, so I'm not taking time on that, but that's the way we see it.
Yeah, on the construction side, I would say that it's a little bit more complicated on the front end, because you're going to have the construction interest as well as when you finish with the project itself, and then you can turn it into the permanent financing. But throughout the construction process, you'll take what's called draws, and you charge interest on those draws throughout the build process. So it becomes a little bit more, I would say complex, if you would, rather than just kind of the permanent financing at the end. On top of that, the appraisal is a little bit different, just because you don't have a house that's already built. So they're going off of kind of specs and how much it's going to cost, and a cost sheet and other items like that. I mean, the construction piece is definitely more kind of on there's more work that's involved with it than if you're looking at just the permanent financing.
Okay. How about give me some advice that you typically find yourselves distributing regarding construction financing? What do you tell people, hey, make sure to do this, don't do this, as though somebody's never done it before? What do you say about construction finance?
On our side,
States.
obviously it's kind of not getting the cart before the horse, understanding your specs, plans, who your builder is, that you're comfortable with the builder, you vetted them, and you've considered contingencies, you've got a proper budget, you're realistic in talking through, what the end goal and project and functionality of the house is, and have you allocated enough money for that, and what that looks like. And then once you start and initiate that process, as Danny alluded to, there's going to be an appraisal process based on those specs and plans, and you're going to vet the budget contingency. And then as you enter into the construction process, and certain aspects are completed, clearing of the lots, and initial dirt work, and foundations, depending upon, again, the severity of the loss, whether it's full or partial, etc., will kind of determine where you pick up in those things. So it's a process just to get those aspects of the build project kind of pulled together. Once the structure is in place, I think it becomes a lot easier, but there's an immense amount of considerations that the homeowner and consumer wants to take into consideration in the very beginning. So as we talked about, you don't run into financing shortages, or unexpected delays of trade partners, or delays in windows or siding or electrical components, etc., that we have seen over the last year or so with supply chain issues. So
Sure.
Having those conversations up front is just as important as the financing component, and part of it in a sense, because as Danny mentioned, as those draws are taken and you're paying interest on it, the timeline is important. It's important to get back to life and in the home and living, but it's also financially important that you don't have those things. So
I'll add a couple things to that for the advice I give customers is just keep your lender involved early and often in the process. And while you don't want to get started without the lender for the construction cost, that there are going to be some initial costs up front, some deposits, some builder fees, maybe some architect fees that you're going to have to incur before the loan can be in place, because like everyone else has mentioned, you need the budget plans and specs. Sometimes you have a cost that you're going to have to incur before you can get those items. So just make sure you document everything very well, invoices and proof of payments. A lot of times you can get credit for that as equity into the deal, as your cash into the deal, because that's a portion of the total cost of the build.
one thing, I'm sorry, I just wanted to add that came to mind that we tell all of our clients that are working with builders in a new build situation, and I certainly think it's relevant and applies here, is one of the great things of structuring your financing correctly and utilization of your funds correctly is, in a new home, there's a lot of things that aren't part of it, blinds and landscaping and new furniture and, different things that you're going to want functionality wise that aren't going to be part of that build process that are going to require funds. And if you kind of, utilize all of your cash on hand to go into this build process, and you get to the end of it and you realize, geez, we don't have rugs and blinds, and I wanted the garage to have epoxy coverage on, or whatever it may be, and I wanted trees in the backyard and certain landscaping. Those things aren't always part of the build process or the consideration of it. So it's always, I think, great to reserve a certain amount of funds and cash on hand for those things, finance it, and at the end of it, once you come out of this and your permanent financing is in place, if at that point you realize, hey, we took out $50,000 in this loan more than we needed, well, you can pay the balance down $50,000 without any penalty, and you're not paying interest on that from that point forward. So I think having that flexibility, the interest costs are minimal with regard to things of that nature, in a short-term period. But if you kind of utilize all your funds, don't set your financing up right, and then realize that you're $50,000 short in adding the things that you wanted to add, trying to do that then in a cash out or, financing it with credit cards, et cetera, is going to be extraordinarily more expensive and also probably put you in, a situation where you don't want to be in from just an overall lifestyle and, cost of living of, well, now I've got $50,000 in these other funds where I could have rolled that all into, a very affordable mortgage structure. So it's just things to consider and think about when you're doing this.
Danny, Troy, any additional?
Yeah, I would say one thing that actually, I was just thinking of as we're talking about this is the other important thing that we do is we're going to vet the builder as well. So we're going to make sure that the builder is actually, that they're a real company out there. And, there's a ton of great builders with the HBA, but if you come across a builder that's selling this great product, and next thing you know, they've only been doing it for 6 months. Well, guess what? We're going to look into that. And we're going to make sure, that what you're paying for is what you're going to get.
I think you bring up the HBA, and I'm going to get my hand slapped if I don't bring them up and say that there is great value in that association and making sure that you are using builders that come that have an association. I think there were some statistics out there about fraudsters typically don't join associations because they want to show up and disappear rather quickly. And I do remember seeing in the news that we did have our first fraud case where somebody came in, took deposit for construction, and then vanished in the Marshall Fire situation. So I know that it's as nasty and as sad as it sounds. Vetting, knowing your builder, checking references, making sure that they actually work on the type of product that you want to work on. I mean, that's the other problem, is that with this increased demand, we didn't suddenly just grow 30 or 40 new builders in this market, right? We don't have a bunch of supply houses that popped up, right? So you want to make sure. And some of the I took a phone call the other day where somebody was a remodeler who had been engaged to build a house. Okay, that's fine, and we're all for growth and maturity and structure, but that's a different business model, right? I mean, that's a completely different model, and you don't want to cut your teeth on per se a situation that has so much emotional baggage that comes along with somebody's home that was lost in the fire. I find that to be well, ill-advised. So talk to me, since this is the HBA sponsored event, what can builders expect when they're engaged? Danny, you brought it up. When you're doing your vetting, like what information are you looking for? What are red flags? What are things that you're going to be checking and vetting to make sure that you have a stamp of approval, let's call it, on the builder? What do you actually look for? What do you ask? How do you do that process?
So if you're asking, Troy, go ahead. I'll let you answer this one. You look like you're jumping out and ready to.
No, I really would need to defer to one of you guys on that. Okay. Because of the way our process works with, primarily doing the permanent financing. So I'll let you take it, or anybody else who wants to take that.
Yeah, no worries. I mean, for us, we're gonna vet the builders pretty much just like we vet a borrower. So we're gonna ask for financials. We're gonna look, how long have they been in the business? How long have they, how many properties a year do they do? What licenses? So we're gonna go and we're gonna look through all of that. We've got third-party companies that assist with that. So it's an approval process for them as well. So we've had builders too that have, wanted to jump on board with us, but maybe they haven't been in business long enough, or maybe they haven't done enough. They just don't have enough experience yet. And, kind of like you said, is, we're not the company that we're going to want them to cut their teeth on. It just won't work for us.
Casey, Brent, anything to add?
Ours is pretty similar. I mean, ideally, we've worked with them in the past. And if we haven't, it's gonna be a similar process. We're going to ask for references. We're going to look for past projects and make sure they were done, on time within budget. But we're absolutely going to vet the builder as well.
100%. Same thing here. You know, we're gonna talk to trade partners and industry groups to understand that, you know, they pay their bills and, you know, they're responsive. And as everything Danny said with regard to financials, vetting, experience, et cetera. At the end of the day, you know, we're just like the consumer. We want the home to be built. We want it to be built right. We want it to be built as timely as possible. And ultimately, you know, not be dealing with, you know, lien waivers or unpaid subs or, you know, any issues with that. And so that's why during the draw process, you know, the draws are going to be vetted. They're going to be inspected. You know, the percentage of work completed is going to be verified. So as you know, those monies are distributed out to the contractor. Again, we're going to be assured that, you know, there's not going to be, you know, a roofing company that has placed a lien on there and you know, all of the funds have been expended on that. So it's, you know, it's as much for the client's protection as it is for us as the lender's, you know, protection in that. So we're true partners, and we certainly act as a fiduciary in that capacity to make sure that, you know, everyone, including ourselves, is protected in that process. And with regard to the builder partners, you know, when we want to work obviously with great builder partners, and we want to pay them timely, so it doesn't create problems with regard to, you know, responsiveness from their trades or anything. I mean, we're you know, requiring the builders to really front the financial burden, that doesn't work either. So, you know, we have to be responsible and responsive as the customer's lender in that process too. So timely inspections, timely distributions, et cetera. And when I say timely, we typically, our inspections are done within, typically scheduled within 48 hours, usually done within 72 to 96 hours. And then the disbursement is done typically within 24 hours, you know, depending upon what time it comes in, 48 hours worst case. So I would say, you know, reasonably start to finish from a distribution of a draw is 3 to 5 days typically. And that's kind of doing the due diligence and such. So
Previous presentation regarding cash flow specifically, and I think this is warranted, that one of the largest concerns from the building community coming to an insurance situation is the battle cry of builders don't want to be the banks. They do not want to, and the reason this came about was a number of homes that were affected. I mean, I think California suffered a pretty bad fire, and the HBAs got involved, and everybody was involved, and they actually saw builders going bankrupt because they had taken on too many insurance projects and too many insurance, not understanding the cash flow, to what you just alluded to, Brett, not understanding the cash flow of the business model they were operating in, going from a remodeler to an insurance repairman, going from a builder, a traditional builder, a spec build, over to an insurance claim, not understanding the cash flow of what that looks like, taking on too many, not understanding the ups and downs, and then ultimately declaring bankruptcy and leaving the homeowner even worse off, because now there's legal ramifications and everything that goes on with their construction build. So we take the position, we always have taken the position of increased communication amongst this triangle that you're representing: the homeowner, the banking partner, and the builder, and increasing the communication between the three to understand. I mean, you don't start a project without a set of plans. You don't start a project without a permit. You need to sit down and kind of have a cash flow conversation and understanding how the cash flow is going to work to allow proper preparation. So that was even brought up earlier in this context. You made a great point about, you know, working with the builders, not making them be the banks. They shouldn't have to be. That's not their job. They are brokers for this services. So that's a great point. I wanted to stress that, because that is the number one reason why a lot of the builders have stayed out of the insurance rebuilding work, because they don't want to be the banks. And it's nice to hear that the bankers understand that, are willing to work with them, so maybe they can come back in and help rebuild this 1,100 home deficit, you know, specific, you know, catastrophic event that we have going on. what other comments or things would you offer up in that context, specifically for builders or even for homeowners at that point? Anything else to add?
I'm good. Danny, anything, or Troy?
No, I think you guys covered it pretty good. Thank you.
So we've got about 10 minutes left, 15 minutes left. I guess I would ask an open-ended question and start by just saying that, what other insights, what other things that you wish that everybody that walked into your office like knew to make things easier, to make things expected? I mean, what are some nuggets of wisdom that you can impart here, not only to the group that's with us, but the group that's going to watch us in the future, to really take it to the next level and be educated in a catastrophic situation and understand more about when they come? Because the goal of this is to put names to faces, to listen and to understand that you're just people, right? We had a great conversation before the thing started, but you guys are just friendly people with guitars in the background, and you're playing Brent. So, I mean, there's lots of great things that we can do here. What else can you do to provide some nuggets of wisdom that these people could or should know to make them better at this process? Because it's a stressful process.
Well, I would say, again, start early, time when it's on your side, you're in a lot better position. And again, I can't begin to imagine what, the homeowners have gone through, being displaced, and their life turned upside down in this. And so, our goal is obviously to make it as simple as we possibly can make it. And what allows that in any lending situation is when you have time on your side. I'm sure all of us, have the resources and capabilities within our organizations to move very quickly and move mountains and make things happen. But it's never fun for anybody involved when you have to do that. Not that it can't be done, and we're happy to do it, but it's a much smoother process. It's less stressful, and it can be financially impactful. Again, I have to assume people that have been displaced, and kind of, as you mentioned, Jake, with the builders trying to bank things and having problems. Well, the consumer, the homeowners have probably had to do some of the same things and waiting for insurance payouts, and they've got expenses they didn't count on. And so when you have those burdens that are unexpected burdens, late payments can occur, credit problems can occur, so that creates other considerations, especially from a financing standpoint. So if you can start as early as possible in the process and lay the groundwork and be positioned as best you can, then at Colton we do a free service called Colton Credit Solutions, and it's all about somebody has a medical collection or a 30-day late or some event that's occurred that's impacting their credit scores. When we've got lead time to take care of those things, it could mean a substantial difference in not only your interest rate, your insurance costs, because everything is predominantly tied to credit scores and how that's driven. So the earlier you can start in the process, the more likely the outcome is going to be much more favorable, and both in mental strain and financial considerations, everything. So that would be my biggest thing, is the more time you can give yourself and allow, the better prepared you're going to be to be part of the vetting process for who you want to build the house, and be part of certain considerations of what materials you want built, and architectural considerations, landscape, everything that's involved in it. Time is I think the most important consideration, and the more you can give yourselves and your partners, whether that's the builder, the lenders, or insurance companies, etc., in that process, the better off everyone will be, and the better experience it'll be.
I like it. That was great. Who's next?
I'll jump in there. Much like Brant said, I would echo pretty much everything he said. I would encourage folks to do their homework, because like I said before, it does feel overwhelming if you've never gone through the process. But I think if you can connect with industry professionals like this panel and talk to more than one person or one bank to find out what are the differences, what are the nuances in how those different organizations operate. And because there is more, excuse me, there's more than one way to do a construction to permanent transaction. And so it's important to kind of get an understanding of what those options are and to find people that you're comfortable in talking to and people that are good at explaining that process, both, on the finance side and on the builder side as well. And to remember that even if you think you may not need the financing because you're in a situation where you have the ability to pay for the home, there are some tremendous advantages in working with a financial institution to help set that outline for how that process is going to work, because we deal with this on a daily basis. And it's something that you kind of have someone in your corner checking to make sure that the process is flowing like it should. And like you mentioned, it really is a trifecta between good communication between the builder and the finance company and of course the customer. And all of us on this panel are familiar with that network of people, and we do this every day. So I think do your homework and don't be afraid to talk to more than a couple of people to get an idea as to what's available.
Yeah, if I could just add on to what Troy said, Troy, great points. Even if you just look at everybody on this panel, we're all different. We're all going to have different rapports with each client, and we're going to mesh with some better and some we're not going to mesh with. And to Troy's point, you need to be confident and comfortable with who you're dealing with, and it doesn't hurt to vet them either. And in that process, I think that it's important to realize, anybody trying to pressure you into things or make quick decisions, has to be done today. No, it doesn't. That's not in your best interest. So, I think that there's a lot of unscrupulous people that certainly want to take advantage of a situation like this. And you really have to be mindful of that and recognize that there's, just as we vet the builders in this process, there's ways for the consumer to go out and protect themselves and do that and get information. When I say take the time, I mean a day or two or a week. It's not going to change anything in the large scheme of things here. So I think that Troy's point is spot on. Know who you're dealing with. If things don't seem right or feel right, or the responsiveness, those things aren't there in the very beginning, it's not going to get any better, and most likely it's going to get a whole lot worse, if people are showing their colors in the beginning. So just be careful.
Well, and to stress that point, I'd like to make it very well known that all four of you are active, great members in the Metro Denver HBA, right? So the HBA, the Home Builders Association, if you're looking, you want to go to where they're building homes, you go to the local association. The HBAs have always been the foremost leaders in that group. So finding a finance partner as well as a building partner from an association does really increase your chances that you're talking to the right people, because just as that remodel builder is kind of extending himself out of his comfort zone, out of his sweet spot to try to rebuild a house at the request of a client, that doesn't mean that you don't have a banking partner that says, no, well, we really focus on DSCR or long-term landlord loans, but you know what? Yeah, we can do this. It's not going to be their sweet spot. You're not going to have the same experience as somebody who does it day in and day out as the four of you do. So, Danny, closing thoughts.
Yeah, I would, my suggestion on this thing, God forbid none of us, we don't ever have to go through something like this again. And my heart goes out to all you guys too as well. Just go into it understanding on the finance side that we're going to look under the hood of your finances. So we don't want to add that extra burden of stress that you guys have right now. We're going to make it as easy as we possibly can. At the same time, we also have to make sure we satisfy the investors so you're able to get your hands on these funds. So go into an understanding that, it may look kind of, nitpicky and stuff too, but what we're doing is we're trying to make sure both sides are happy. And we're not trying to we don't want to make your life any harder. And you can get upset with us and tell you why or tell us why. And we'll be there to walk you through it, but the more information you have and you can provide up front, the easier it's going to be down the road.
What I can't remember if it was you and I that were having the conversation early on. We were talking. You don't lie to your doctor. You recommend not lying to your banker, right? I mean, that's just not good business because you might recommend the wrong prescription, right? So you really want to get the truthful information out there in order to make sure that they can prescribe, because everyone here is in the business of getting projects done, right? We all have a mutually agreeable objective of getting the project done, and I think that's a great point. So speed, time, trust. Perfect. Casey, I'm going to let you finish, and then we're going to open it up for any last minute Q&A, and then we'll rock and roll. So co-chair, you've got it.
Absolutely. So I think all those points are great points, valid points. The only thing I would add is something, Brant, I believe you said earlier in the night, that don't go like all into the construction project. I would say make sure you have your own contingency, not only for those items that you were mentioning, like blinds and, fence and landscaping afterwards, but also for any life events that happen during the build, and contingency outside of what the bank's going to require, because I've seen that get used up and then the borrower not have any source of funds. The builder's not going to fund it, the bank's not going to, especially if you're maxed out on leverage already. So I just don't overextend. Make sure you have your own contingency funds and the ability to solve problems if they come.
So early, Brent, early conversation, get in early and have the conversation, trust your partner, find the right person, be truthful and transparent, and then have your holdback. I mean, those are 4 great takeaways that everybody, if you live by just those 4 takeaways, I think you're going to have a much better experience, and financial stress will not be part of the rebuild. So I think that's amazing. I want to open it up. If there's any additional questions, obviously it's been open the whole time, but if there are any last minute questions from the group, Debbie, JDLP, or Nathan, you were on another panel with us. So anything that you guys have specific questions for the panel, I'll take that as a stunned silence unless we see something. No. Okay. Gentlemen, I can't thank you enough. I think you've given excellent pearls of wisdom tonight. And I'm really hoping that everyone reaches out to you and contacts you. I put all the contact information in the chat, and that will be published with the actual production. So if you get a phone call or a contact, please know it's from the Marshall Fire Group, and they saw you here tonight, and they know what an awesome team you are to assist them on their group. So with that, I'll go ahead and call us successfully completed for the last of the 4 panels for the finance and insurance group. So thank you so much.